Thank you all for your responses. So how do we avoid big losses? Okay. Please take out your notebook and pen or pencil. Note down these two, very important. There are two rules and three principles. What are those two rules and what are those three principles? If you remember this slide, if you note down this slide, you're never going to lose and especially if you implement this particular learning, you're never going to lose big money in the stock market. Of course, there is a small losses or short losses will be there in the market. Okay. We cannot avoid that, or a temporary losses I call it will be there in the, it's a part and parcel of investment. But maximum is we should avoid big losses. How do we avoid big losses? Number one, this again I learned from our own Warren Buffett. Never lose your money. Rule number two is never forget the rule number one. So these are the two rules. Hope you all making a note. Never lose your money and never forget the rule number one. Now we'll talk about three principles. What are those three principles? One is money management. Many people, they ask me, sir, I'm getting loan at 8%, 6% or 7%. Can I borrow that money and invest in the stock market so that I get 12% or 13% or maybe 20% return? Is it worth? So I say no. Don't take a loan and invest your money. What do you mean by money management? You earn X amount of money, and in that X, you have some expenses, you have some liabilities, you have some investments. All after doing all these things, whatever you left, maybe 10%, 15% or 20%, invest that money. Don't use your credit card for your necessities, and that money you should not be invested in stock market. You should fulfill all your needs, all your expenses, all your liabilities. Remaining amount, take out certain money, maybe 5% or 10%, invest into stock market, identify good companies. This is called money management. So that even if you lose that money, some portion of your money, if you lose it, it will not affect your cash flow. It will not affect your entire money management system. Second thing is risk management. How much risk I can take with the particular entry or particular stock or particular investments. Some people, they invest entire 10 lakhs or 20 lakhs or 15 lakhs, entire money into one stock. That's, foolishness. They should not invest, at one go in one stock. They should see, invest 10,000, 20,000, and then gradually increase if it is doing good. You should, each and every stock, you should keep a margin, 2%, 3%, or maximum 5% for that stock. If it's going beyond 5%, there's something wrong with the particular stock, and you should use your stop loss technique and exit that stock and reinvest that money into another profitable stock. Okay, correct. So this is very important in managing your risk. Unnecessarily taking more risk will lead to multiple issues. There are few investors who invested 5 lakhs, 10 lakhs in one or two stocks, and today they are suffering because those once it corrects by 25% or 30%, we're going to lose a lot of money in that. So unnecessarily we are taking more risk. So your risk need to be managed with the both like diversification as well as staggered way of investing. Finally, the trade management. This is very important. Many people make a mistake in this. When I say trade management, suppose you identify one particular company in one particular sector. Okay, you have to wait for the particular entry point. Okay, when I say entry point, the stock should be in the up move, not in the down move. Many people, they buy when the stock is correcting. They say that I want to make more average of this stock, and they keep on buying, and the stocks further goes down, and it will settle at some certain price, and it will take long time to come back to the price which they entered. So that's why they lose out the time. So that should be avoided by investing when the stock is in the rise. The stock increases by 5%, 2%, 3% by some, if your capital is, let's say, 1 lakh, invest only 10,000 or 20,000. Once it rises to another 2-3%, invest another 10,000 or 20,000. Like that staggered way, you have to manage the trade. Unnecessarily investing entire money and or buying at when the stock is reducing, buying at that point of makes doesn't make sense. Okay. So these are the three things. One is money management, the other one is risk management and trade management. If you remember all these three things plus those two rules, then you are not going to lose a big money in the stock market. Good. Are you all with me? What do you mean by right entry? Okay. I said no in one of the slide, you have to enter at the right price and then there's a good exit. Okay. There's no right exit, there's a good exit. We need to do the entire market analysis. When I say market analysis, how global market is doing, how Indian markets are doing, how BS is doing, how Sensex is doing, and what is the sentiment of the market, how many buyers are there, how many sellers are there. Are some indicators. We need to do the market analysis. Like I'll take an example of cricket. Okay, when I say cricket, not an it's a T20. I'm taking the example of an one-day match. Okay, one-day match. So you need to, when I say market analysis, compare this with a team analysis. How the opponent team is there. So how the team is formed, who are the good players. So those things. Second is sector study. Like, for example, you need to study the bowlers. Who are the bowlers, main bowlers? Who are the swing bowlers? Who are the fast bowlers? Who are the spinners? Who is in the fast medium and slow medium? So this is called sector study in the market. Like we have different sectors, right? Pharma sector, IT sector, auto sector, manufacturing sector, like that. We need to study the sectors. Then selection of stocks in the sector which are in the momentum. So when you want to hit the ball on the rise. When it pitches, it's in the slot. The ball is in the slot. You hit, with the middle of ball and it goes for a maximum, right? Similarly, you need to select a company. For example, you selected pharma sector. In the pharma sector, there are 10-15 companies. Which sector in those companies, which company is doing good? How this company is performing? So how this customer base is there? What are their unique products? So those things you need to identify and then make an entry. So that's what I'm saying. Buy when the stock rises, buy on the rise. It's very important. And you need to sell it immediately after. Once you reach, you fix your target. Like it can be 10%, it can be 15%, or it can be 20%. You fix your target for each stock and exit it. Book the profit. Otherwise, what happens? It reaches to 10%, again it goes to the same price, or it reaches to 15% profit, and again it goes back to minus. Sometimes it goes to 20%, and sometimes it goes to minus 20%. So don't play with the stock. Once it reaches 20%, 15%, or 10%, whatever your target is there, once it reaches, sell that stock, make that profit, and reinvest in again whenever you get an opportunity. Most importantly, stop loss. Using stop loss when the market, when the particular stock which you bought, if it is getting into negative zone, and if it's getting into slip mode, then you need to exit with your stop loss. Maybe you take 2%, 3%, or 4%, maximum 5%. Once it closes, just take out that money and try to reinvest in some other stock. Okay, don't increase your losses, otherwise it will lead to big losses. So how do I do all these things? Like I don't have much time, right? I'm busy with my work, I'm busy with my business. I don't have much time to do market analysis, sector analysis. I can't find the stock which are in the rise. I cannot study all the sectors. I cannot study each company in the market and all those things. Okay, Arthika Swatantra, we can help you in in certain way. How we can help? We have created a exclusive WhatsApp group for identifying or for helping people to invest in stock market